What's going on, guys? Welcome back to another video. In this video, we're going to be talking about Castor Maritime, ticker symbol CTRM. So they have announced that they have filed a pretty substantial shelf registration. So we're going to go over exactly what that means and basically explain that this isn't really that big of a deal for long-term Castor Maritime investors. And this could be a great opportunity to buy in if you do not already have a position in this company. Now, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. I am just here to analyze and give you guys all the up-to-date information on all of these stocks that you are invested in. So we're going to also go over the overall dry bulk shipping market and see where it's headed throughout the remainder of 2021 and 2022. So before we get into all of that information, if you guys would like to earn those 2 free stocks with Webull and help support the channel, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get those 2 free stocks. And if you enjoy this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So if we look at a chart with a little bit more time on it, we can see that Castor Maritime really was rocketing up in January, going all the way up to $1.95, and since then has had a very significant sell-off. Now, I do think that there is a very big opportunity for Castor Maritime to bounce back after this, and we're going to go over that through the remainder of this video. So Castor Maritime filed something that is called a shelf registration. So let's take a look at exactly what that is. So when we come over to the Investopedia definition, a shelf offering is a Security and Exchange Commission SEC provision that allows an equity issuer, such as a corporation, to register a new issue of securities without having to sell the entire issue at once. So essentially what this means is that a company like Castor Maritime goes to the SEC and says, hey, we have a bunch of shares that we want to offer over a period of time, but we don't want to have to go through the hassle of registering every single time we want to do one of these offerings. So they essentially put them up on this shelf, and they can offer shares out of this little bunch from time to time. So they are not offering the amount that has been in the headlines all at once. Now they could, but it's highly unlikely. So when we come over to the actual article that is going to be describing this, so Castor Maritime announces today that it has entered into a securities purchase agreement with certain unaffiliated institutional investors to issue approximately 192.3 million of its common shares and warrants to purchase up to an aggregate of 192.3 common shares at a purchase price of 65 cents per common share and accompanying warrant and registered direct offering. The warrants will have an exercise price of 65 cents per share and are exercisable immediately and will expire 5 years following the date of issuance. The gross proceeds to the company from the offering are estimated to be approximately $125 million before deducting the placement agent's fees and other estimated offering expenses. The offering is expected to close on or around April 7th, 2021, subject to the satisfaction of customary closing conditions. The securities described above are being offered by the company pursuant to a shelf registration statement on Form F3AS. Including a base prospectus contained therein. So let's take a look at exactly what that says. So the key point of this exact SEC filing is going to be the use of proceeds. Unless we specify otherwise in any prospectus statement, we may use the net proceeds from the sale of securities offered by this prospectus for capital expenditures, working capital, to make vessel and other asset acquisitions. That is the most important part. We've seen Castor Maritime announce acquisitions of vessels many times over the past couple of months. They've significantly ramped up their fleet, as we can see at the bottom of this article right here. So on a fully delivered basis, Castor will have a fleet of 14 vessels with an aggregate capacity of 1.3 million DWT, consisting of 1 Capesize, 5 Kamsarmax, and 6 Panamax dry bulk vessels, and 2 Aframax LR2 tankers. We refer to information on a fully delivered basis, which basically means that they've taken delivery of these vessels. So it's very important to note that Castor Maritime is massively expanding their business. If they can use the majority of this $125 million offering to purchase new vessels, this is going to be a great sign for the business in the long term. So let's get into some of the reasons why I think that Castor Maritime could potentially be a very good purchase on this dip. Now, as you guys have heard me say in a lot of my other videos, I'm not the biggest fan of holding penny stocks over the long term. But when we see companies like CTRM come in and they have a pretty substantial dry bulk shipping business, they're adding new tankers, and we're seeing the world open up. And we have some other things going on that we need to talk about as well. I think this could be a very good play over the next 2 to 3 years. Now, when we come over here, this is going to be the Baltic Exchange Dry Index. Essentially, what this index is tracking is the price and the cost that dry bulk shippers like Castor Maritime are going to be able to receive for their services. We saw in February of 2021, this rate was at 1,308 on this index, and it got as high as 2,317 about in March of 2021. Now, essentially what this means is that if this price shoots up, it means that the demand is significantly increasing for dry bulk services. And we also had a little global fiasco with this Suez Canal. So we are seeing here that there's going to be some pretty significant disruptions in global trade, and I think a lot of people are going to put a lot more focus on the importance of these shipping companies. They are a massive part of the global economy, and as we saw, when one of these little ports gets shut down, it affects the entire deliveries of the world. So I think Castor Maritime is in a position to take advantage of this. They are significantly ramping up their fleet, and they're going to be able to do more business in the future. So then when we see that the rate for what they are going to be able to charge is increasing as well, they have more vessels, the rate that they're going to be able to charge is more, we could see Castor Maritime get back into profitability sooner than everybody is expecting. Now, there's going to be two very important keys that we need to keep a lookout for over the next couple of months to solidify Castor Maritime as a good longer-term investment. And the first one of these is going to be the amount of new ships that Castor Maritime is going to be adding to their fleet. We've seen them add a lot of vessels through the first quarter of 2021, and I'm hoping that they are going to be able to add more, because if they're adding more vessels, they expect to do more business, which is going to bring in more revenue for the company. And when you combine that with the Baltic Dry Exchange Index increasing, which tracks the rates that these dry bulk shippers are able to receive for their services, then that could lead to even more revenue for the company. And the second is kind of an expansion of the first one, and that's going to be their earnings. So Castor Maritime needs to come out with better earnings and do more business if the overall world climate allows them to. We are seeing some backups in this shipping industry due to the Suez Canal blockage, but if Castor Maritime is able to massively ramp up their service providing, then I think we are going to see some significant increase in the share price of Castor Maritime. But again, this is a pretty speculative play at the current time. It is down a significant amount today, and this could be a very good dip to buy if you are looking to swing trade this or get into a longer term position in a pretty decent dry bulk shipping company. So that is going to conclude this update on Castor Maritime. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button, and if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And don't forget, if you would like to help support the channel, make sure you check out that Webull link down below. So I hope you guys are having a really profitable day, and I'll see you guys in the next video.